Well, if you don't think the market can turn on a dime, well, you probably didn't catch yesterday, right? That's just how simple we can turn around. Now, the only question is, will it continue? Did the worrying stop yesterday? Of course, we're seeing the regional banks bounce today. We'll talk all about this. We'll take a look deeper into what's going on right now. Do the bigger banks look better now? We'll talk about them also. We'll take a look at the airlines. Looks like we got an updated release from United Airlines. And of course, there's some disaster stocks out there. GitLab getting hit hard. We got Daniel Pipitone today. TradeZero. We'll talk a little bit with the CEO. Coming up, team. You guys smash the like. Welcome to it. Pre-market prep. It's time to rise and shine, traders. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Let's run down the S&Ps, the indexes, the crude real quickly. We're up 32 and a half handles, 39.21 and a half, a ways away from yesterday's high, but we'll see what that CPI number does. The buck getting a little bit of a bounce, up 19 cents. Bonds giving some back after that huge 3-day rally, down a little over a point. Crude can't catch a bid, down a $1.32 at 73.48. We're starting to hang out down here near in the lower 70s. Gold, after its torrid run, down just about $7, 1909.60. Silver in the red by 19 pennies at 21.73. And Bitcoin having another good day, up $520 at 24,925. I want to bring on Triple D. I want to bring on Money Mitch because I got a story, as Rabbi Schwartz used to say. I got a story.
It's story time.
It's a true story.
It's a true story. We like true stories.
True stories. So in the midst of the chaos yesterday, okay, I see a tweet from Dennis. And it says, someone's showing people lining up at banks, right? Mm-hmm. And I'm thinking, wow, that's bad. Like that would be an epic. And Dennis said, is it true? Okay.
I didn't know. I didn't know. And so I'm sure there were some people at SIVB. And so I'm thinking, what's a simple thing to do, right? There's a Comerica branch a mile and a half from me. So I figured, I'll go there, right? Comerica is getting hit. So I drive over there and I get out of the car and I take a picture and I'm like, man. And I went into the bank. There were more tellers in the bank than customers. Okay? Didn't look like a bank run.
Guys, money's digital. Money's digital nowadays.
Yeah. I talked to the manager a little bit and she was like, no, it's not been busy at all. And I'm like, so I talked to her a little bit and I asked if she could take a picture in the bank. She said no. And I said, I understood. So went to the car. I called Triple D and I'm telling him this. And he's like, really? And he goes, yeah. And he goes, the banks are ripping right now. I got to go. And I went back home and I bought stocks. And something that I haven't been that aggressive in a long time in the market. And I got to take them off my screen.
What ones did you pick on?
I picked on FRC.
You bought FRC. Where'd you buy it?
I bought it in a couple different accounts. 28 and 32.
Holy, it's 44 right now. What else did you buy?
I bought KeyBank. That it's not a big mover. I think I got that in the lower 11s.
Yeah.
And then I said, I call America. It was the old McDonald's indicator. Remember when I said I used to look at the McDonald's drive-through during the pandemic and it was bad? Yeah. So I bought a little Comerica. And then I'm like, well, if all the banks go under, then everyone's going to put their money at JP Morgan.
and I've never had
JP Morgan too.
And I had JP Morgan in my portfolio. Yeah. But these are not trades. I'm not going to talk about these stocks anymore. I'm not going to do technicals.
They could be trades. I mean, they're going up 50% in a day, FRC.
No.
What could be a long-term investment? It's up 43% here this morning.
I know. It doesn't. If I buy more, it will go down. If I sell it, it will go up. I'm just going to do nothing. The yields on these things were crazy too when I bought them. So
yeah, I know.
I just took a stab. I don't know. I just didn't feel like the world. I mean, they could all be at zero tomorrow and I'll lose, a percentage of my portfolio and, it won't be such a great call. But it was a confluence of like no one at the bank, talking to you, talking about the price action. We had held the pre-market low at that time too. So how I'd like to see those levels hold. But, you get lucky every once in a while.
Yeah,
I didn't buy Huntington Bank. I thought about Huntington Bank, but I did not buy Huntington Bank.
Did you get what were you going to say, Mitch?
My biggest question would be why yesterday? Why yesterday?
I'll tell you, I did this. I actually did the same thing. Not aggressively, but the reason I started to buy some of these beaten down regional banks yesterday afternoon is because the risk reward shifted big time. I mean, you had some of these stocks down 70, 80%. I'm like, okay, if they don't go under, if they go under, it goes to zero. If they don't, there's 300-400% upside on some of these things now. So I'm like, I'm getting the 3-to-1 risk reward here. Like a PACW, which was $5 at the low yesterday. And I did buy some PACW. I didn't get 5. But after the fact, and again, I was too scared to catch the falling knife. And I will say, I was scared in the morning. I even tweeted out, this is scary. Because you're watching multiple regional banks fall better than 50% after already falling for the last 3 days. And some of these now 80% off the highs, especially like in an FRC. And you're looking at like 20, 19, and you're like, this was 120. I'm like, if this doesn't go bankrupt, there's going to be some big upside here. So I decided to just buy a couple and more call option money, like what I would be comfortable losing if I lost it all. So I said to myself, I'm not comfortable going a full-size position in these things. So I don't want to, lose a whole pile of money. But I'm comfortable lottery ticket style, like to buy small in a couple of the banks. I asked Joel what he was buying. I went the same. I went to KeyBank. I've traded that for a long time. I'm kind of familiar, like just with trading it. But again, this is completely out of the ordinary. And then I went to PACW. I bought that in the 8s and the 9s because I was just looking. Again, I didn't get the 5s. And if it came back to 5, I don't think I was going to want it. I was like playing it that, okay, I was scared. I tweeted out, this is scary. And then about 10:30, about an hour after the tweet, I tweeted out, was that capitulation? Because I wanted to throw up watching it. So that's when I'm like, okay, if we just had the capitulatory event in these regional banks, I want to get a little bit of exposure here because this could be like, a generational opportunity in some of these banks if they don't go under. Now they still might. Nobody's got a crystal ball here. Maybe we're not out of the woods. Maybe these are all going to be zeros. But I feel more comfortable today than I did yesterday at 9:30. So
my biggest so on that end, so one thing that I would ask is what's the difference between a falling knife and capitulation?
Well, it is, but I wasn't trying to catch them when they're going straight down, limit down. I waited until they started to bounce. So we had a huge bounce. The market went green. They were buying tech stocks. It did not feel like the end of the world bank run. It just didn't feel like that. And then Joel saying there's nobody even in the Comerica. And yes, we know it's digital, Mitch. But I'll tell you, if you're really worried about your money, you're probably going to have trouble getting it out. And I know, like, there was multiple wires that failed, in obviously in the Silicon Valley Bank situation. And that's why there was lineups out there because people like, I'm not getting my wire through, I'm going into the branch. It wasn't feeling like that, at least from what I was asking out there. So again, it's a huge risk play to buy any of these things yesterday. That's why small money, nibbling, because it felt like maybe it was overdone. And I think obviously hindsight capital 2020 here, you're looking now and you're like, yeah, it probably was overdone. I mean, PACW from $27 a week ago to $5. And now it's back up at 13. I mean, you may never see that $5 ever again. If it's not going under, you're never going to see that again. So,
you know what another
maybe it's
thing
going to
too?
go under.
Yeah, you know what another thing that that entered my thought process is I thought the vultures. You know, the vultures are going to be out there. You know, and maybe some of these banks get picked up, right? I know the other thing with the FRC, I saw that JP Morgan was helping them out. So I'm like, if JP Morgan's helping them out, then, and then JP Morgan goes under, but people are just, they're going to swoop down. And I think, isn't someone going after the assets of SBNY or one of the banks? Yeah, there's rumors, but I just thought the vultures would be out there. And if anything, maybe some of these things get, because you had that during the financial crisis, right? I mean, they were take unders, but we'll see. I mean, we got
the
CPI
risk reward. Like, just take it back. Like, all I analyze, I always like the 2-to-1 or 3-to-1 risk reward. And I just looked at the PACW and I'm like, if it doesn't go under, we could be looking at this thing back at 25 or 26 bucks in a month or two. It's not going to come right back, but we could be looking at that thing getting all of its losses back if there isn't a bank run and it doesn't go under. But, if it does, I was comfortable losing the amount of money that I put into it. Again, you had to be comfortable and say, this is a zero. I'm coming in here, and anything I put in this, I'm willing to lose it all. Not, I'm going to cut this loss, because this could have just halted on us, Mitch, and been, taken over in a zero. So, and we're still not out of the woods. We're not saying like that was it. I'm saying there's the potential that we just saw capitulation yesterday morning. I also bought some IWM, the Canadian equivalent, which trades on Toronto there, that tracks the IWM. I bought some of that. My wife's RSP. I was like, she's taking
go out shopping with the wife's account.
The reason I went to IWM was we bounced right at the December lows. And obviously the IWM getting hammered because it's got some banks in there. Hammered a lot harder than the S&P. So I bought some of that too. I still have a lot of cash. I don't think by any means we're completely out of the woods here.
Yeah.
But I felt like yesterday was maybe some short-term capitulation. Now, CPI could change things. We got 18 minutes away.
Yep.
Yeah.
CPI could change things. And, as a trader, people are saying, oh, those are risky trades. As a trader, it is my job to take risk. And like I said, I wasn't going all in. I went about a quarter size of a normal position on the KeyBank buy and the PACW buy, a quarter size. So they're not like I'm getting rich off these. But I was like, you know what? That could turn into a full-size position if that thing comes all the way back to where it was 5 days ago. And would I be happy that I bought it down there? Yeah. If I lost it all, I was comfortable doing that. I just figured I was going to take a shot here that maybe this isn't happening. And again, as bad as I felt, and you can show my tweet, Mitch, about like 9:45, I tweeted out, this is scary. And I was buying nothing at that point in time. I was just sitting there and watching it. And I'm like, I feel like throwing up here, watching these regional banks just going down, 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 and so many that were going down. And then looking back, that's why I tweeted out an hour later and I quoted my own tweet. And I was like, I was scared. Was that capitulation? Because usually I've seen a lot of stuff. And when I get scared, that means there's probably a lot of other people who were scared. So that's why I feel like we kind of had a capitulatory, at least in the short run, like hammer yesterday. And they came into the tech stocks hard. Microsoft and Apple's. And again,
that was a good sign, right? A
good
sign right off the back that you saw the big boys
they weren't selling
going
everything
straight up.
Yeah.
At the gates, they were looking strong. Microsoft, Apple, the leaders, right? Google, they were definitely pushing. Now, one thing I want to reiterate that you just said, Dennis, and that's why I asked you the question there. What's the difference between, and you just explained it, just maybe let's reiterate it there. Yeah. The difference between the falling knife and the capitulatory bottom was that Dennis was actually starting to see the stocks starting to work their way back up.
I went after.
And so there's the separation. That's why I wanted to ask that question, Dennis. Yeah. It's not necessarily telling you that you caught the knife, but did you wait for that move to start coming back up? That's the difference there, team. That's what I wanted to kind of explain more. The teaching moment there is that I know it's very difficult because I can tell you guys, I didn't catch the falling knife. If anything, I'm on the other side of the coin today. So I shorted Citi I'm not losing on the position because I was up decent towards the close. But just to kind of put it in perspective, right? So the difference there on the knife is waiting for that action to start coming back.
Actually, his last words were the
up.
last things on his phone. He goes, I think you just said something was halted to the upside, is what you said. I gotta go.
Yeah, they were halting. They were actually going to limit up, like just on the LULD. So we limit up, limit down, and then we were limit down, and they were halting, limit up, and it just felt like that was it.
I felt the difference too was one thing that we got, right, is that we got a full backstop by the regulatory, right? That mention of all depositors now being backed up. The only time I've ever heard that, like, we would back up at all costs was in the pandemic, right? When we said we will print as much as needed to keep this market at where it was. Well, I think whenever we hear that word all, or like the Fed is going to do whatever it takes, I think we can almost start looking for the pattern that we quickly sweep up the uncertainty out there. Because that's what it seems like. That's the only thing that really was the difference between, what we got Friday and what we got Sunday going into Monday. So
and it could all change here in a few minutes. I do think if we sell off significantly on the CPI, I think you're going to find buyers. So I think
that's interesting.
Interesting. I'd be cautious selling the rip here if we get a rip off CPI, and I'd be inclined to buy the dip, and I will. So I'm going to leave you around 826 or 827. And again, we've got our guest coming up here right now. So I won't talk too long.
Is he around?
But 826, 827. I'm actually inclined to buy the dip here if we get a dip on the CPI.
All right, let's go to our guest today, a new one, Smash the Like team. Let's get it started. Dan, how we doing?
Gentlemen, good morning.
Good morning. Good morning. It's good to be with you. We're here to go ahead and talk a little bit about the markets, talk a little bit about TradeZero. How we doing today, Dan?
Fantastic, guys.
You didn't run to your bank, did you?
Yeah. No, but I mean, it is definitely incumbent upon us to let people know that things are safe. Things are safe here. They don't need to panic. They don't need to worry. But wow, what a ride.
Yeah, you get down and dirty in there, Dan. Like, how do you approach this? And now you've been in the markets a long time. And I was trying to remember back to the financial crisis, what was happening as I'm seeing regional banks fall 40, 50, 60% that morning. And I'm like, trying to bring back, my memory from 15 years ago and how I was trading this and how to approach this. How do you approach a morning like that?
Listen, back then, I think wildly different than where we are today. Back then the world was coming to an end. Right now it's, there may be a bank or two. And that who knows where this contagion is going to go. But back then it was like the world. It was everybody and it was everything. And for us as a, really focusing, I had a firm called Noble Trading back then. We wound up selling that to Lightspeed in 2010. But during the financial crisis, it created tons of volatility, created lots of opportunity if you were a trader. Buy and hold, folks, I think really we're dealt a lot of pain during the financial crisis. But if you were a trader, I think it really kind of like the pandemic, it really kind of set up lots of opportunity, with Citi trading down at 97 cents. And, these banks that we knew weren't going to, no one knew anything. But, sort of the tier one banks really taking it on the chin in a way that I think that folks weren't prepared for, and and they bounced back fairly quickly. So in a similar way, guys, the way that I heard you guys talking about the regional banks this morning, it kind of made me think of the JP Morgans, the Citis, the Bears at the time during the financial crisis.
So what about your customers? Were they and obviously you can get a look, and we don't want to tell us specific stuff, but did you feel like your customers were looking at this as an opportunity, or were they all scared? And I was scared yesterday morning too, sitting on the hands. What happens, with retail customers during an event like that?
I think there's a little bit of both, guys. The more savvy folks, I think, will read into the news and understand, what this is, and the others that kind of just read headlines are calling us and saying, hey, is everything all right? Should we be concerned? We're going to send something out today just to kind of allay some fears, if you will. But yeah, I mean, folks, if you turn on the TV, I mean, you may think we're back in 2007, 2008, but But it's going to be interesting to see how this all plays out. What some of the other ancillary players that are affected. We're reading some this morning about Bill.com, a company that we use for our like payment processing and stuff like that. They have a lot of exposure there. And what does that mean? I don't know. You know, are they going to go away? Everyone's going to be made whole, but who knows how long that's going to take before folks are made whole. And I know that there are, you know, some private equity banks and folks that are looking to step in to kind of bridge some of these startups that are, you know, fully on deposit with some of these banks. Hopefully, some of that kicks in, but we'll see. You know.
Dan, we got to get one question out of the way. Are you related to Joe Pipitone?
He's Pep. I'm Pip.
There you go.
I'll tell you guys a quick funny story. I'm a big Yankee fan. I was at the went to the World Series 2009. Obviously, last name Pipitone. I had that one all ready for you, Joel. I know Pep and Pip. I get to, especially if you're like 50 years old and older. I'm not saying how old you are, but folks usually 50 and older are the ones that'll say that to me. So I was at the World Series 2009, and if you guys are Yankee fans, you would know these names. And very sadly, there was a little table set up outside the stadium. It's like not official in any way. And behind that table, signing baseballs and autographs, was Jim Leyritz and Joe Pipitone. $10 a pop. Yeah. Wow. So I don't know if Joe's you know, done so well in his later years, but it was kind of sad.
He actually passed on yesterday.
Oh, get out of here!
Yeah, I just.
Oh my God, I didn't know that.
Yeah,
oh,
yeah,
shit.
It's the Rowdy Star. Three Gold Gloves. But anyways, let's talk the markets. Let's talk the platform because we got CPI coming up.
Let's talk short selling.
Yeah, sure. Yeah. Dan, I don't know if you guys ran into some issues yesterday. I was in our live trading stream. I did hear multiple mentions of TD Ameritrade kind of giving people struggles yesterday. No struggles yesterday?
No. We were breathing that free air, streaming data, instant orders, all that good stuff.
That's what I like to hear. So tell us a little bit about what TradeZero has to offer. Of course, the competitive advantage that you guys have.
Yes, fantastic. So we are actually today, TradeZero as a brand, we are 3 broker dealers. TradeZero America, where I sit in the office in Brooklyn. TradeZero Inc. out of the Bahamas for our international clients. And TradeZero Canada for our Canadian folks. The offering is pretty consistent across all 3 firms. Same technology, same sort of access to our key differentiator, which is our short sale facilitation tool. This product is patent pending. We actually released it at the Benzinga FinTech Awards or the Trading Bootcamp. It was a trading show in July of 2019 in New York City. And we've been at this ever since. We have some exciting new stuff coming out in the very near future. But this platform itself really kind of sets us apart because there are some firms out there where you can get locates. A locate, if anyone is unaware, is essentially a precursor or a permission slip to short a stock that is not easy to borrow. So some firms will facilitate locate transactions as we do, but we kind of take it a step further. So if someone comes onto the platform, they want to short a stock that's not easy to borrow, which I'm going to show you guys in a second. They can interact with our short locate tool. They can create a watch list of all the shorts that they potentially want to short during the day. Should I share my screen? Maybe this will be better.
Yeah, can you do that? That'd be good. We'd love to see the platform.
Cool.
Definitely.
Down in the corner, you'll see share screen.
You'll see present, and then.
Oh, I see entire screen. Okay, cool.
Yeah, pick the screen you want to show. Right.
We there?
Takes a second.
I got it. There Boom. We go. We're on the screen.
Awesome.
Boom.
Okay, so I was kind of following along with you guys and just pulling up some of the symbols you guys were talking about.
Yeah.
And so this is a typical dashboard that folks will see when they download and install Zero Pro, which is our flagship platform. We have 4. There are 2 web versions, mobile app, and the Zero Pro. I actually trade on our free web version. This one, there's a monthly subscription of $59. If you maintain 30 grand or more, it's free. But so, okay, the shorts.
Yeah, talk about the tool.
So in our level 2 window, you'll notice at the very top of the screen, next to you type in the symbol, there's a little either green S or a red LR, which stands for locate required. So PXMD, this is a hot locate symbol for us the other day. And you see that this red LR is there, which means that the locate's required on this symbol.
Yeah, so that means you
for
cannot
UNCY.
just short it. You got to go out and find a locate there. So your tool is going to show us how to get that locate.
Correct. So let me just come back on here.
Connecting back in.
So when we log into the platform and we go to the shortlist window, we're able to see which stocks are not easy to borrow and which stocks are just by looking at the level 2 window. Additionally, if you go into the shortlist window, when you type in your list of symbols that you want to see for which ones are easy to borrow or which ones are not, those symbols that show up in green means that there's no locate required. You can just go on to the level 2 window and just press the short button. For symbols that are not on the that require a locate, you'll see that there is the symbol, there's a corresponding price where you can put in a number of shares and then hit the locate button. When I click this button, we're actually going out and we are interacting with 10 or 11 different locate providers and coming up with the best price. And we see that if I wanted to locate 100 shares of AIMD, it's going to cost me 1.59 cents per share. 100 shares, $1.59. As soon as I accept that, you see that now.
No, the stock has the locate.
Now you have the ability.
Now we have 100 of 100. Used to say it was a red LR here, but now it's 100 shares available of 100 that I have in total that I can short. So if I put out my short order right now, put on a limit above, you'll see that that's been decremented. So now I only I can't, if I try and short it again, it's going to say, hey, you don't have enough shares located. Go out and get them. Okay. So let's now, I want to actually do a short.
And we do got CPI coming on.
Yeah,
so we'll get you back on here too, obviously, to dig into this a little bit deeper here because we're 3 minutes away.
You guys want to pause?
We'll take a moment today at least, but definitely you guys want to go ahead and check out TradeZero if you guys are looking for opportunities, especially for shorts and locates. You guys can see there, definitely have a good advantage.
And I think the big advantage here too, and obviously we'll have you back, Dan, for sure. The big advantage here is that you have a lot of retail brokers, some of these smaller ones that are free that don't even offer you the ability to short. You not only offer the ability, you have offer the ability to go out and actually get locates like a professional tool has. So I mean, it's giving the little guy that opportunity to trade both sides of the market, which I think is so important. I trade usually market neutral, equal longs, equal shorts. I think in this type of market, you got to be able to go both ways. Dan, that was awesome though. We want to have you back real soon.
I'll show you the sexy on the next visit.
Yeah,
thanks, Dan.
Sure.
All right, on the next TradeZero Tuesday.
Going up or down on it, Dan?
Up or down? Are we hot or light?
We're hot. We're hot.
All right, Dan saying hot. We'll take a look here. CPI expectations.
Dennis, get out of here. Get out of here, Dennis.
I'm going wide.
Going wide.
I will be back at you, but I'm going wide.
Mitch.
All right, readings
you want to
here.
give the setups?
Yeah, EPS year over year is 6%. Expectation here prior 6.4. Then when we get to the month over month levels, those are going to be estimated at 0.4, prior 0.4. You guys can see the month over month. I have them highlighted here. I can put them full screen so you guys see them a little bit better. And then we'll go to the chart action as it hits the tape. And of course, we'll look at the month over month at that 0.4. We'll see if that kind of changes there. Of course, year over year is the one going to be watched. Core CPI year over year is 5.5, the consensus, and the prior was 5.6. We'll look to see what we get here. And like always, we'll find out if the market reacts similar how we're expecting it to, because it's a little bit difficult now, right? I mean, is this going to help interest rates? Is this going to not help interest rates? We're going to be worried about the banks. A lot going on today, team. So the market might take a little bit to decipher where it wants to go. I kind of also we'll see if kind of Dennis's outlook, if we get that first down whoosh, do we find some buyers? Let's find out.
Yeah, let's do the technical setup. We've seen this scenario before where they juice it up. Well, the first move is down. Unless you just got a big algo jumper. Is it even out yet? Someone got it on the early wire. You made a new pre-market low by 2 points there, and you're on the rebound. So the first dip was bought. I don't even know if the information is out yet. Breaking news,
got it,
Mitch.
Here. CPI year over year at 6% versus 6% expected. Prior 6.4. CPI going down a little bit there. That's actually good. It came in line. Core CPI coming in at 0.5 versus 0.4, so a little hot there. Year over year estimate coming in line also for core CPI, 5.5 versus 5.5 estimate. So all in line. It looks like to me a little bit of a lift off here from the numbers. I felt like in line was perfect. Everyone kind of expected a little bit of a hot report.
Yeah.
A hot report. So I think in line's actually a good one.
Who said buy the dip? Well, it wasn't me, but you did not have a very
I got
long
86.28 on SPY.
Really?
Yeah, but that took a lot of guts. Okay, I'll leave.
Gotta go. So I don't know what if the first thing I saw was in line, I don't think I would hit it. So they hit it down 2 points to the pre-market low. You had to be out there in order to get it. We're ripping now. So let's look at the upside here. Monday's intraday high. Now you guys know I talk about the intraday high versus the 24-hour high. So the highest we got after 9:30 yesterday was 39.40.50. We just stalled 1 point under that at 39.50. So right now I'm going to go a 2-star at 39.40. If in fact you get through that, you have some real estate on the upside. The true high from yesterday was 71.5. But here, the first stop at the interday high from yesterday, the Bears took it. But man, that was a quick dip, man. I don't know what was hot in there, Mitch, for someone to hit the sell button like that.
There was nothing there. They might have jumped on the first number. The first number I saw come out was the month over month number that was 0.5 versus 0.4. But then everything else after that came in line. So maybe that was a number, Joel, that they just saw at first. The first number just a 0.1 higher. Okay. They jumped on that. But then as soon as they saw the other ones in line, you saw it really pick right back up. So a lot of times also I feel like it could be orders that are just sitting out there, right? Stops. And then it goes wide and it just collects that volume and then just shoots right back up. So I think that's what could have been there too. Of course, not stops though, right? Because it's in pre-market, right? But
there's stops in the futures. There's stops in the futures. Yeah, so they could have triggered some stops there very easily. That intraday high from yesterday is looking pretty good. Of course, you wouldn't have gotten filled at 40.50 because the high. Well, you might have been able to. Maybe in some of the other platforms, but if the micros or something like that. But nice move so far. I mean, this is what the market wanted. You know what a term I was going to throw out yesterday, and it's still way premature. But we haven't talked about a V bottom, where they just give you one shot right at it, and because you took out the previous day's low by like 40 handles. I mean, I don't know. I don't know if it's too quick to say that, but so far so good. The day is still early, though, folks.
Yesterday, it looked like everyone would probably have said that we're going right back down to those all-time lows, and then with this in-line report, some people can come out yelling that we're going back to all-time highs.
Oh well.
So who knows?
Yeah, I'm not.
Get ready, guys. Strap to your feet because it's going to be one of those days where you're going to have some people saying that. The bank worry's done. You don't have to stress about anything.
Well, what does this say about the Fed now? What's the Fed going to do? Are they still going to hike a quarter? Are they going to hike a quarter?
I think
are they going to listen
to
pre-market prep? A half, Mitch. They're not going.
The inflation is the concern here, not the banks. The banks really did the banks show concern? Really, at least it's only 2 regional banks that we know about. The other banks. I didn't hear any concerns. And from at least what was said yesterday from the CEO of First Republic, he was saying that the bank was not seeing big outflows and that it was operating as usual. That came from the executive chairman of First Republic Bank. So was there really concern for the banks? That's what I'm wondering. Or was this kind of just overblown?
I think you have scenarios where with social media and everything that happens that things can get blown out of proportion. I don't think we're out of the woods on the bank situation. I don't think we're out of the woods on the inflation situation. I just think that and like I saw Nomura analyst says a quarter point cut next week. That's not going to happen.
A cut? Oh
Yeah, a
man,
quarter point cut.
we are all
We're
over the
falling out of
place.
bed here, folks. We stalled big time at that intraday high from yesterday. Now falling back into closer to the 3,900 area. Instead of a big rip today, for me, I think a positive close here, something over 3,900, that psychological level. Also, you got to keep in mind, you got a quad witch coming up on Friday. People are jockeying for position. So that there's a couple other factors, but I don't have to see us go, absolutely crazy and, be up 50, 60 handles. I'd rather see just a stable day with the incremental gain. But right now we're bouncing around like a ping pong ball, still up 20 handles. That was quick on the pre-market low. So, you got buyers down there. I think if now you're going to have to look at it and say, where am I going to buy ahead of the pre-market low? So we'll see. We'll see. It'll be interesting to get Triple D's perspective. He put his game practice into action there, but I wonder if he just sat a bit or lifted an offer on that Triple D. Were you just a sitting
There was
duck?
no lifting offers. You had to sit.
You have your
like a
bid
buck
out
and a
there.
half wide. So I just threw it out there on the low end, and I actually got hit on some SPY.
Yeah, that's what I felt.
Again,
like
it's come back right back down here though, so it's not.
We're not
looking
out
as
of the
good
woods
of a buy.
in
It
this
looked really
market.
good off the hop, and now it's starting to not look as great. I got 86, the 20s, 86 in the 286 in the 20s. So I didn't get the low print. I think I went scratch SPY. I was about a buck higher than that, but I threw it out there when it was just wide. I just threw it in the middle, and somebody hit it.
Yeah, that's what you have to do.
Get your order out there. You want to get done? Get your order out there. Yeah.
What are you seeing? What are you seeing in the stocks?
I feel
here?
like I'm just convicted that I feel like we've got people yesterday that are like hitting themselves. Like, why didn't I buy some stocks yesterday? That's why I feel like you've got underneath demand here now. So even despite this number coming in line, which is not fantastic by any means, it didn't come in hot either though. So I think it's good enough to have that underneath demand still there. So if we get anywhere close to like scratch on SPY with the banks trading up, and we haven't even gotten individual stocks here. I mean, the banks are all trading significantly higher here this morning. Not just the regionals, the majors are trading up significantly too. Bank of America's up 4.3%. I do have paired positions on some of these. So short some banks, long some other banks, trying to jockey. So, and again, some are up more than others, depending on obviously their exposure and stuff. But I just think like you got people that are probably having remorse yesterday, especially if they were selling stocks yesterday morning, that will be looking to get back in. So I think you've created a little bit of underneath demand here, which we did not have yesterday. So that's the good thing. Again, not out of the woods. Lots of things to think about. This wasn't, a cool number by any means. Does the Fed go a quarter? They might. I think the half is completely gone. I think there's possibilities it could go a quarter still, but I think it can be like one and done. So the one thing that the banking crisis did do for this market is bring the pivot a lot sooner, or the potential, maybe not a pivot, but the potential for a pause a lot sooner than we were looking at just a week and a half ago.
Going back to the regional banks, like another part of my thought process was I didn't know if Warren might be out there sniffing around.
That's what I was wondering too.
Yeah. And then the other thing is like, what I would do if I was one of these banks and I had a squeaky clean, balance sheet, I would put it out there and announce a buyback. And I mean, it's some of these. I don't know if some of these have already had buybacks in place, but let's go to some of the individual stocks here. Let's go to the Bank of America. I'm just going to go to that one because I don't have any positions in it. You got a nice pop to 30. That's a good psychological level. There's nothing there on the charts. 29.72 was yesterday's high, so not even a gap up. See if you can hold 29.72 for that. And what other ones do we want to look at? Man,
You can look back to some of these regionals here too. I mean, your FRC is $49 here now, Joel. I know you don't want to look at it, but you're up like 75% one day. That's nothing short of incredible.
I know.
When Joel gets down and dirty, you got to follow that guy, I think.
Well, you wanna hear that there is a little bit of a bad news. I wouldn't call it bad news, but I talked to the investment committee about it, and beforehand, and I cut back what she wanted to do by a good margin.
She wanted to go all in.
Not all in.
We got to bring Lisa on the show. She's pretty solid too. She holds. Nobody holds better than Lisa. She holds better.
Well, sometimes she holds on too long.
Yeah, like in the Peloton case.
Like with Peloton. But I don't call her too excited to let's buy some stocks. And so she was like, okay. So, but whatever. I am going to be taking them off my screen. Is anything getting hit on this, Dennis? The bonds, what I mean is it just can't be.
I'm looking at the screen. There is not a lot of red on the screen. It's actually a lot of stuff is green here, so it's very interesting. I do see pockets of red. Commodities aren't up much here. USO is trading down, but the stocks themselves are trading higher. It's kind of an everything rally here today. Though, like tech is up pretty strong. Banks are so strong. Banks are definitely your driver here today. I mean, FRC is breaking through 50 right now.
It got to you know how it got to silly town. It got to I don't know. I shouldn't look at this.
FRC, where'd it go?
Oh man, it got to 54.88
this morning. It's already been $54, huh?
Yeah.
What about my PACW? I shouldn't look at that one either. It's 14.
I almost did that.
I'm up 50% on that in a day too, and I'm like, wow, that's 15, a big gain. Especially when we don't know if we're out of the woods money, Mitch. We get handed 50%. We're not even sure if we're out of the woods.
That's why I'm on the sidelines. Yeah,
1540. 1540.
I wish I would have went all in.
Yeah.
You guys are braver than me. Let's just say that much.
Yesterday,
I was
both
staying on the sideline.
I'm imagining Joel went not all in there either. It wasn't.
No,
we were going with what we were willing to lose, like valuing it at zero. When I buy a stock and, and just take, some, even like an ETF or something, like I'm buying IWM. I'm not saying IWM's going to zero and I'm willing to lose it all. The IWM's like, I'm thinking it's, within 10% of the lows and probably, maybe not going to go lower than that. These were like literally could have went to zero on us yesterday. So they were gutsy trades. And that's why you can't throw big size of that kind of stuff. But, you're watching it. You can get down and dirty in anything. Just get to your comfort level. I mean, but, if you were buying those yesterday, you had to say, I'm willing to lose all of this. This is like, I'm not throwing my whole portfolio into one of these things. And I'm sure there's some people that did it and really killed it. But you just got to be careful with, how you approach very high risk trades. But the reward's huge too. I mean, Western Alliance Bank, I did look at this one yesterday, $7.46 yesterday at the low. It's $35 now, Joel.
Oh.
It's 500% from the lows. 714, is that right? 400%. 400% from the lows. I mean, yesterday. Like, that's a 400% trade. The thing didn't get taken over. I mean, there was huge return. And again, you've just got to analyze some risk reward. And people say, how can you go in there? The reward was there. When these things get into the single digits, the risk reward just set up that, hey, I think there could potentially be zeros, but if they're not, they're going up 200-300%. So there's your 3-to-1 risk reward that I always talk about. So you just got to analyze it from risk reward.
Yeah, we are now catching a little bit more of a sustained bid here, but it's not all rosy out there. We do have some problem. We do have some turbulence in the airlines. Mitch, give us the information.
All right, let's go to United Airlines. As I should have called that trick there on their earnings. They gave us really good numbers. Now they're pulling it back here. United Airlines Holding now sees Q1 adjusted EPS at 60 cents versus $1 versus 66-cent estimate. Sees fiscal year 23 adjusted EPS now to $10 and $12 versus $8.70 estimate. And then we also got some news out there from Southwest Airlines and JetBlue, but theirs was more positive. United Airlines pulling back some of their guidance here after a pretty decent guidance when they reported, but you can see that they did the flip on you.
I don't like that. I don't like the inconsistency.
I don't like that inconsistency at all. That to me, it was a trick, but I mean,
I mean, right? I don't know how things can change that fast. I'll just give you. I'm a Delta Airlines guy, anyways, and I can't remember the last time I flew United. Big hub here. It used to be the old Northwest Airlines. You probably haven't heard of that, Mitch. 4480.
Wasn't that long ago, Joel.
Joel makes me a baby. I'll take it.
You heard of Northwest Airlines?
Yeah, I'm sure. Yeah.
Come
Northwest
on,
was
man.
like 10 years ago, wasn't it? It wasn't that long ago. I flew Northwest all the time. Maybe it was
1-800-225-2525. I think was.
Man, Joe knows the phone number.
Pre-market low comes in at 44.76. So you're $2 off the low. So I think that when I see those kind of, the higher lows like that, I'm thinking, man, maybe it's not going to get back down there. Breaking 48. This is what I'll give you. It's easier to identify resistance than support in this one. Our resistance, yesterday's low was just above 48. Couple other lows at 48. So I won't be comfortable with stock until it has a strong big above 48. And now, man, what are you going to do? Just pick these daily lows here as potential support. So that's tough. Let's look at old Delta. Spoos are mounting another move higher here, as we mentioned.
Underneath demand now.
Yeah. Yep. 39.
Now FOMO hitting.
Yep.
Be careful.
FOMO was hitting yesterday, and then it's continuing into today.
Yep. Yeah, I think, but today's the dangerous area, right? Because some of these banks are up massively. They could come back down, right?
It's hard not to take the profits. It's going to be hard for Joel not to take an 80% profit. It's going to be hard for me on my PACW not to take a 50% gain in one day. It's going to be hard to do that. So, hard not to take those gains. I mean, even Josh Brown was saying he got down dirty in Schwab, and he's like, if this thing goes up 10 points tomorrow, I'm probably going to sell it. I mean, again, you've got to analyze it. You do have to analyze it from the risk reward it was at yesterday, though, because the risk yesterday was losing it all. So now we're only going to take a 50% gain. It's like, wow, did we get enough return for warranting that risk from yesterday? I think you almost got to at least double your money to warrant the risk we were taking by originally going into those stocks. Tough, though. It's a tough call here because this is a big rally really, really quickly.
Now, we could take a look maybe to see what else is kind of moving around. I know I've been taking some shots, oil downside. How do you guys feel about the oil game? Do you feel like we could bounce again? I know there was concern.
You know what? With this oil, it's just getting to be with it. When you hang around support too long, what happens? And now, you shot out of that low from 2 days ago. You shot out of it like a cannon. And now you're just hanging out down here. I've been calling for this in the 60s. And every time it gets into this area, just boom, rebounds right out. OPEC, we're cutting production or something like that. So I don't know. It's feeling heavy to me down here. But until you really crack that December low, which is 70.63 bases the April contract. You just got to respect the trading range. And it's been a choppy trading range. And I haven't looked at the oil stocks. Let's take a good old Exxon Mobil. How's that trading? Bad day yesterday. Look at all those lower highs, man. That just means there's someone bigger than your little retail trader trying to work out of a big position. Lower highs each day. That's not, you haven't seen that in a while in Exxon Mobil. So I'd be cautious on these oils overall, just based on the chart.
Full disclosure, I do get Chevron, Oxy, and Valero short. So we'll see what happens on those types of names.
You're short Oxy?
Yeah, short Oxy.
You're not scared of Buffett?
No, I actually think Buffett's going to wait for the crack.
Oh, gosh. Maybe you're right, but
he likes to wait for the crack and take that money.
I'm heavy on the other side of that. I'm actually double-sized position in Oxy.
Hey, we got a lunch bet, my friend.
No, you don't need a lunch bet. There's real money on the line here. But
Buffett's going to get us
needed here.
Buffett's going to get you a steak or me a steak. We'll find out.
Anyways, that's surprising to me that you'd be short Oxy with the Buffett put down there. But I've talked about Oxy for a while. I've been just buying this every night and also being long also on my long-term account too. I just like the level and I think there's value here.
Yeah, to me, it's just a technical level breakdown already as you've broken down there on the trend line around the 63s.
Yeah, you're a technical trader.
You rejected 63 also for the bounce where you broke down. So if you cut through 56 on my end, you got lower lows coming. All right, we'll see what happens there on that support with Oxy. Let's get out of that one. Let's go to disaster stock of the day. Let's go to GitLab. GitLab got destroyed here. They reported their earnings, so I'll give you guys those numbers here. GitLab Q4 EPS at a loss of 3 cents, beat the loss of 14-cent estimate. Sales at 122.9 million, beat the 119.56 million estimate. They do see Q1 adjusted EPS at 15 cent, a loss of 15 cents versus a loss of 16-cent estimate. So actually, when I looked at the guidance is not too far off. The revenue is down. That's where they kind of got hit harder. Their EPS didn't look too bad. But where it gets bad is the revenues at 117 million to 118 million versus 126 million on the revenue side.
Don't follow this company at all. I do know it's the reason that Team is down, though. There is sympathy. If you look at Team, a stock that I do trade Atlassian, because I was like, why is Team getting beats? And I was like, oh, this GitLab thing is similar industry here. So GitLab down 32%. You look Team, this one's down $5. So I don't trade GitLab. Don't know anything about it. I do know Team trading down, sympathy on it, though.
I had to guess at the symbol. I got it right the first time. GTLB. I got it right the first time. I don't know anything about this stock. It's down 14.25 bucks here. Just traded 30.25. Let me get my pre-market chart here to see where the damage went to. Let's see here. The damage was even more severe in the after hours. You got to 27.55. I'll give you early parameters. 27.55 to 32.80. So pick your poison in there. Daily lows. Well, you took out the low of the. Did you take out the low of the move here? Oh no, you got. Yeah, this low was 33.88. So that's going to be major resistance. Can I find anything on the monthlies? No, the next monthly low, you're already through 32.33. Then you got to go back to March of 22, you had a low at 30.74. I don't know. I'm not shorting this one, and I'm not buying it either, but looks like it's trading a huge discount. Team, as Dennis mentioned, falling in sympathy. You got to be careful, with these because it's, how highly correlated, what specific the problems are. This got to 144.25. You do have identifiable levels to take a look at here. This must have been an earnings shellacking. You had the low of the move, 114. What was your high? 114 to, let's call it 190. That's 76. That would be 38. Tack on 38 to this low. 38.14 is 152 when I went to school. So you are getting back about half of the move, and you've been hanging out down there. So we'll see what happens. No really daily lows in this area. Spoos are climbing.
I'm doing a little ticker time there. A little ticker time in the chat there. You guys dropping some tickers. One thing that I did want to mention here, and it's got brought up by the chat here, was necessarily did you guys see the move in like the industrials? Because I know Dennis has been calling for that turnaround. It looked like it started really breaking. Deere, cat, especially deer. You can see that break. Do you think that this is now finally where we start seeing these kind of continue to fall off?
I'm on the complete different end here now. I turned bullish yesterday. So, I mean, we're at, I'm looking to buy dips. So I'm just on the opposite end of the spectrum here. I feel like the Fed's going to be one and done. I feel like the pivot is coming sooner. Unless we get another couple bank collapses, that will change my opinion in a hurry if some of these banks, especially the ones that I bought, go to zero. But if we don't get any more bank collapses here, we don't get some runs on the banks, I think there's a lot of people who are underinvested here that might be looking to get in. It just changed. The narrative changed because we were like inflation. Now all of a sudden they've got to worry about the banking system to a certain extent. So there's a pause here right now. And that pause could mean that stocks could get some life here. So, I mean, we are oversold on a lot of stocks. So I think, when I look at the deer and the cat, if I was short them, I think I'd be covering on pullbacks here now. Again, deer, 440 when I went bearish. It's 390, 400 now. in the pre-market. 405, I guess, is kissing in the pre-market. That's an odd lot, but I think I'm buying dips here, and I'm trying to increase my exposure too. So again, when we're ripping here higher again here, I just think that we had capitulation yesterday.
Yeah, S&P.
I may be wrong, but I'm betting long right now.
Yeah.
All right, let's go to thinking about it wants to do the Uber. I'll mention the news with it. Uber, Lyft, and Dash notched higher here as California court classifies drivers as contractors. I'll make comments. I'll let Dennis limit. I think he has a position in this one, but we could take a look at it. Joe, I'll let you give levels. For me, I was watching Uber before this all happened for it to break 35, and it looked good. Now I'll let Joel give the levels that he's looking for. What do you see on the charts?
Man, I would just say wow, how high did we get on the earnings? Let's see here. 38. I'd say this 34 area. I'd say you got room up to there. A couple highs in the 34 handle. 34.52, 34.63. That'd be a nice target. Not seeing anything at 33. Lyft. That's oh boy, Lyft is getting a lift. But yesterday, you got a pair of high. I mean, I think you got a wall of resistance at at the $10 area for now. I don't get DoorDash. I go and pick up food. I just don't. I am so tempted to buy this stock because when I go pick up every time, like I'm waiting and someone comes in, oh, you're for DoorDash. Oh, you're for DoorDash.
Oh, you went on the mute trick. But I agree with you, Joel. You do see that every time you get in a store. The only thing I also see, Joel, that scares me is those TikToks on those Dash drivers, man. Man, that's got me to the point where I don't even order from Dash because I see so many times these guys getting in confrontation because people are not tipping them enough. Drivers knocking on people's doors and stuff. Man, I'm staying far away from Dash. I know I don't want to work for them.
These kids too, like they're trying like to order liquor too.
Yeah, why not?
Kids. Yeah.
There's convenience stores. There's everything. I mean, now you can get everything delivered to your door.
Man, but just the premium that they kick into it. But Dash, it's at 58.80. I see all these. If you're in for this one. In the upper 59 handle, we haven't quite got there yet. I see 3-4 highs in that area, just under 60. So that's what I'm looking at for DoorDash, DASH, and Lyft. This thing just can't catch a bid. Made a new all-time low yesterday, getting a little bit of a pop today. I don't know what it's going to take to turn this one around.
Someone said, we ordered Grubhub. The food didn't even come. The pizza wasn't even there. They said it was there. It was not. I would have been upset, man. I would get upset. If I'm hungry and I want my pizza, I want it now. But let's take a look at Snapchat. This had been running before with the TikTok rumors. Has pulled back all the way back down there towards about that $10. What do you think about Snap?
I'd buy it. I like it here, actually. And again, you can tell the tone change here from yesterday to today. 995 is the low. I'd stop myself out at the low of the move, 968. I think there is an opportunity for this to rebound here. If we're going into rebound, they're looking for risk on here stuff. Something like this could do okay. Again, if we're feeling the Fed pivoting, and that's what I think is not necessarily a pivot, but a pause. We'll say pause. Pivot's the wrong word. Feeling a Fed pause, that could give you a little bit of a green light for some of these higher risk stocks. So I actually like Snap here. I think it's a buy. Just my opinion.
I wanted to bring the CME Fed tool really quickly. Joel, if you want to give some levels on that Snap, go ahead.
Yeah, I mean, I see there's a bound of support between 950 and 10, but I think you're going to have to up your bid to get it tipped under yesterday at 995. Maybe a quick little sell off. You could get it scratch at 1023 today. On the upside, if you clear 1073 or 1070, that's your 2-day high. Not much on there until you get to the mid $11 handles. So that's what I'm looking at in Snapchat.
All right, I just wanted to bring this in because we've been kind of keeping up with this, right? The CME Fed tool just finally changed for the CPI number, and it's funny. A week ago, 69.8%, 50 basis points. 1 day ago, That was 65% for the 25 basis points. And now we're at 91.5% for a 25 basis point hike rate and only an 8.5% chance for no rate hike rate.
This is all good for tech stocks. I mean, this is all good for those growthy tech names. I mean, we've changed a lot. And again, some of these growthy tech names have nothing. Again, if we lose the banking system, it's a completely different story. So that's your risk. There's still a huge amount of risk out here. Don't kid yourself. But I'm betting right now with the buys that I've been doing recently in the last 24 hours is that the banking system is going to be sound, that we're not going to lose very many more banks, if any at all, and that it gave us a really good opportunity yesterday, not only in the bank stocks, but maybe some other stocks too that were getting hit hard here, to maybe get off market neutral and maybe get off, the bearish stance and maybe get bullish for, a little bit here. And again, we're going to change our opinion again. And people are getting frustrated because I was bearish yesterday, or at least, scared. I don't know if it's necessarily bearish, but I was definitely scared yesterday. And then all of a sudden I come in and, I'm feeling a little bit more bullish today. Your job as a trader is to change your opinion. Your job as a trader is to trade what is in front of you. Your job as a trader is not to stick to I'm right and the market's wrong. If
That's
you
the
have
worst
that
possible
opinion,
thing.
if you are like I'm right and the market is wrong, you will lose money in being a trader. Your job as a trader is to change your opinion when you get given new information.
Final story, and then I gotta hop. In the elevator at the old building we were in, the Bright Trading building, in the elevator with Eddie Franco, and an unnamed trader who had been struggling, and he had some good runs, and he was really struggling. And Eddie said to him, like, "Hey, what's going on? How's it going?" He goes, "Market ain't acting right." No, Eddie said, "You're not acting right. The market acts right. The market's right. It determines your P&L." So I got a hot, fun show today. Everyone be careful out there. Looks like we're going through the intraday high from yesterday. That was right here, right now. Things are kind of wide open on the upside here. I don't want to say 40.70 is a target, but 40.70 could be a target. Everyone have a good day.
All right, we'll see what happens there. We're starting to wrap up and get to the trading action. Dennis, I'll let you get out of here.
Yeah, I'm going to go trade. Again, I'm buying dips. Again, we just ripped high. So you can see, like at 8:30, I was like, I'm going to buy a little bit of S&Ps here. SPY, we got a little dip down. I'm using opportunities. Again, don't have to chase here. It's going to be choppy. I don't have to go buy up 43 handles. I think you're going to get more opportunities. Maybe it's going to come back in. But as stocks dip here, I'm more inclined to put on risk. I think we saw a short-term bottom yesterday morning when I tweeted out this is scary. And again, an hour later, I tweeted out, was that capitulation? Because I was really scared. And I hadn't felt that way in a long time. So that makes me think that a lot of other traders were feeling that way. And a lot of traders was, get me out of all the regionals. Get me out of these stocks. I don't want to own anything right now. It's just too much risk. It felt like throwing in the towel yesterday morning. That's what, you look back. And you're still not far off these lows. I mean, we can analyze. The IWM is down 177 now. It's bouncing from where, I was buying yesterday. But we were 186, a week ago. You're still off the lows here. I think there's traders who are going to be wanting to get into this market here now. And I think they're going to be using dips to get in. So I'm not selling the rip, but I am buying the dip if we get a dip.
Oversold on the downside on IWM, oversold on the downside for SPY. You guys know I only use RSI in extreme moments. And to believe it or not, the RSI said bounce yesterday. I didn't believe it, but that's what the RSI said.
Yeah, so just go with your indicator and not what you're feeling, and you'd be doing pretty good there.
That's how it is sometimes, right?
It is.
I mean, that's the difficult thing, right? I mean, because the noise yesterday was run for the hills. Let's just be honest. The noise was run for the hills.
Oh,
that's what it was.
I was scared yesterday morning.
That's where,
and again, I was buying nothing at 9:30.
Right?
It took me till 10:30 to okay, we're bouncing here now. I feel like we maybe put in a bottom. I feel like it's a little bit safer than it was an hour ago. But when you feel like selling it all, it's usually the time you should be buying something.
And it's difficult.
Again, I have a lot of cash still, so I'm not all in by any means. But put a little bit to work yesterday.
And I think what's also difficult is if you do turn on your media, right? If you are watching CNBC, if you are watching the financial medias, because I'll tell you right now, I was nowhere near as worried as I came in on Monday, and then I saw everything. I wasn't worried. I was like, well, if one bank goes away, that's fine. I mean, one bank is one bank. It's not JPM falling. It's not Bank of America. It's not even Wells Fargo.
It was some of them
going
falling
down
yesterday morning, though. It started to spill over, and you saw Bank of America, losing. Bank of America lost 15% in 3 days.
Yeah, no, they were getting hit. They were getting hit percentage-wise on their numbers, but I wasn't hearing any concerns from the banks. If anything, everyone was like, these big banks are fortresses. All right. And I mean, if anything, those were dip buys, opportunities, because I don't think anybody thought JP Morgan was going away tomorrow. Let's just be honest. I don't think anybody thought that could happen.
I don't think anybody knew at 9:30. This is what gives you the opportunity. Is I don't think anybody really knew what was going to be the next thing to happen. And I don't think we still know, but I think we're more comfortable here today. I feel like I don't feel like we're going into, oh, they're just going to start hammering all these regional banks. And maybe I'm wrong. Maybe it's going to happen. And maybe there's going to be more bank runs, but I don't feel as much fear now.
I think even the Fed solved that. They said they backstopped.
But they solved it the day before, and then all the fear happened the next morning. So where investors were running for the hills because we're going to lose all of our investment in all these regionals, and I was worried about it too.
Was that just the media overblown though, right? Them overblowing it, causing the exuberance or the overreaction to the downside. But what really was underneath the hood was that it wasn't that bad. Now that the regulators backed it all up. That's just what it seems like,
I don't think anybody knows anything here, but I'm betting. And as a trader, all you do is make bets. I'm betting that.
That's all you can do.
Capitulation.
Hey, you saw the turn. That's what you do, right, Dennis? You saw a little bit of a turn, and you took your shot. As a trader, you're never gonna know if you're right until pretty much you get that P&L, and then maybe you could say you're right, but that's just hindsight 2020 also, right?
Yeah.
It's just more along taking probability. You felt you had probability on your side. Like you mentioned, risk to
reward got better.
You saw that falling knife before, but then now it had turned into more of a capitulation low with the turnaround starting to come. And you took some shots, man. I can't blame you for it. Shout out to you. Shout out to Joel for taking your shots. We don't know if they're always going to work out, but that's what trading's all about in the end, right? Hey, you go do what you do best, my friend.
You got to trade. It's my job. I don't pay the bills if I don't trade. See you guys.
Yeah. Dennis says it all the time, right? It's not about being right. It's about changing with the information, being flexible. Looks like they were flexible enough to make some positions to the upside. I hope that everybody out there was able to deal with all the noise out there. I know it's very difficult. I know that there was a lot of talk yesterday that it was kind of like the end of the world. Well, you guys see it, how quickly the flip and the change of the coin can happen, right? Well, let's bring you guys over to live trading action. That's going to come up next, but definitely want to give a shout out to our guest today, of course, from TradeZero. And if you guys want to go ahead and check out a brokerage that can really give you access to extensive inventory of shorts locates, check them out, team. I'll throw up the link one more time so you guys can check out Benzinga's shorts to watch. And definitely, take a look at it. One of the things that I always say is look for competitive advantages. You guys hear Dennis Dick talk about it all the time. Find tools that can help you as a trader. So if you guys like doing some shorts, like you guys see me doing some shorts, well, check out TradeZero for those locates. We'll see you guys, like always, right here on Pre-Market Prep. Up next, we got some live trading action. And of course, this Sunday, we got the book club. Don't miss out. Japanese candlestick trading, charting techniques. If you guys want to learn a little bit more about Japanese candles, and of course, you guys use those candlesticks right now, where did they come from? Find out a little bit more about technical analysis on our book club. You guys can hit the form. I did get a couple of people to reach out for the book. Get it now. On Sunday, we'll be starting with the first 2 chapters. And just for you guys out there that might not have the book yet, you can get your free preview on Google. So reach out to that form. I'll send you guys that link so you guys can check out that free preview and get over to the book club. All right, now up next, we got, of course, live trading action. That's coming up next. We got Lord Ryan, Zunaid, and I. We'll see what we can get into and see if I can bounce back a little bit. I know I have City in the red a little bit. Going to cut that one, but it's a tiny one and took some profits yesterday. Got some oil to the short side, and we'll see if today we get some up action in some of these tech stocks. Looks like we could get a little bit of a push. Let's find out, team.